Well, this is Hall Martin with Investor Connect. Today we're here with Andrew Goldner of GrowthX. Andrew, thank you for joining us.
Hal, thank you for having me as a guest today. I appreciate it.
Well, great. Well, thanks. And it appears you guys have a really great model there going for raising funding and helping startups grow and so forth. And I was curious if you could tell us more about it.
Sure, happy to. And doing that through capital, talent, and know-how. At the epicenter of everything we do is our seed stage fund, and we're investing in mostly software. We tend not to invest in hardware or science because we're looking for capitally efficient businesses. And we're all about helping founders go to market. You know, the problem that we're looking to solve is an over-rotation in favor of product at the expense of market. And so everything that we do at GrowthX, through the fund, through our academy, through our market acceleration program, and through GrowthX Corporate, is all about identifying the best innovators and helping them win. On the fund side, we're looking to earn the opportunity to invest by helping. And again, everything that we do in the context of help is all focused on market development as opposed to product development.
That's great. So how big is your fund, and what exactly are you guys looking for in startups that fit your thesis?
Sure. So Fund One, which is a vintage 2015 fund and is closed, we made what is likely to be our last investment about a week ago in a great company called Visage, which is helping multinational corporations around the world recruit great, diverse candidates. Has about 40 investments in the portfolio, and that was around a $10 million fund, and that was our proof of concept fund. The purpose of Fund One was really to prove our thesis that our expertise in market development would attract the best founders, would earn us the opportunity to invest in those founders, would create an information advantage for the fund and our LPs, and would go ahead and create alpha and reduce the J-curve effect at the seed stage. And we've done that pretty successfully. That fund was a mix of hardware and software, was a mix of B2B and B2C, although it tended to be mostly B2B. It was Silicon Valley seed stage. And I think that's an important distinction to make, because when you travel the country like we do, investing in great founders, not just in the Valley, but outside of the Valley, the nomenclature can be different. And so when we use the term seed stage, we really mean what Silicon Valley refers to as the seed stage. And with software nowadays, that's post-revenue. That's an early inkling of product market fit, a lot of testing to prove out that product market fit so you can raise a Series A to scale what you know to be the best, most profitable, predictable, scalable type of revenue. And, you know, again, Silicon Valley really does get to define what the stages of venture capital mean. Now, that doesn't mean that Silicon Valley gets to define or own the word entrepreneur. And that's a very important concept to us, because entrepreneur is a very broad term of this wonderful creative maker class around the world, and that flourishes everywhere. And we favor entrepreneurs that are proximate to their customer as opposed to being proximate to their capitalists, which is why we're looking for great founders outside of the Valley. But the vast majority of venture capital is still coming out of Silicon Valley. So if you want to be a venture capable entrepreneur, which is one type of entrepreneur, the Valley gets to dictate a lot of those terms. But just because you don't want to work in someone else's shop, you want to work in your own, doesn't necessarily mean you want to have 17 shops in 4 countries in 2 years, right? Growing big fast is not the only way to build a company. And so lifestyle business to us is not a 4-letter pejorative term. And so these are some of the things that we believe in and why we're investing outside of the Valley. But of course, we're founded in the Valley, we're based in the Valley, we're proud to be there, we're taking all the best of class learning and all the pattern recognition from from all the deals we see there, and trying to take that and also find great founders outside of the Valley.
Well, that's great. Your seed fund, that's pretty rare for most venture capital, but at the same time, you do look for post revenue. How much revenue are you looking for to find that enough validation behind it, but still be
You know,
seen?
it's a great question, Hall, and it's one obviously that we get asked quite often by founders. It's a fair question, but it's almost impossible to answer. Your market. It depends on your business model. It's also a moving target because technology is cheaper and easier to build than it ever has been historically. And the talent to build products are more plentiful than it ever has been. And so the target, the revenue, the customer development, and other market development milestones that you need to raise a seed, an a B, is getting higher and higher and higher. But right now, when we tend to look at, let's say, a SaaS, we're looking to 10, 15, 20, 25,000 of true monthly recurring revenue. Seed is probably too early to really get an idea of where the churn is, but we want to see how quickly and how steadily they went from zero to the current revenue. Obviously, it depends on whether they're selling into the small and medium business or the enterprise. But these are some of the statistics and the traction milestones that we're looking for. Obviously, in a marketplace, we're going to be looking for a decent amount of monthly gross market value. And for both models, we're also going to look to see how they're growing month to month. The net over the gross, we're going to want to see whether they're capable of 10xing in 12 months, which is what we think to be some of the healthy characteristics of seed stage software and marketplaces. And so that gives you a rough idea. But listen, you know, we have 8 core values that we run our fund on. And the first one is people. We're very much a people first organization. We do absolutely buy into betting on the jockey and not the horse. And so we're post revenue. We have guidelines that we want to see, but we're always interested in getting to know the people, hearing the story, understanding what they're doing, and obviously factors can change our view on just how much revenue we want to see. And also, to be clear, Hall, we're post-revenue because we can and should be, because we live in the age of applied technology. Again, technology is cheaper and easier than it ever has been, and the talent to build product is more plentiful than it has been. And so founders of all stripes, when doing software, should be able to get farther with less. And so if you come to me and claim to be raising a seed and doing software, which is really the application of pre-existing technology, I'm going to be concerned about why you're not post-revenue. It's not the actual dollars in the bank and how many dollars you have stacked up in the bank, but the grit, the perseverance, the creativity, and the ability to thoughtfully, even just through intuition, focus on market development rather than just sitting in a room all day with features and functionality of your product.
Yeah, it's always a question, if it's such a great product, why isn't somebody paying you for it? Even if a few dollars, why is nobody paying you anything for it? And it's always a level set to see exactly where people are in the process, too.
Well, that's right. And I mean, listen, like one of the greatest living entrepreneurs, Jim Barksdale out of Jackson, Mississippi, McCall Cellular, Netscape, FedEx, right? Jim is very famous to saying it's not dog food unless there's dogs eating it.
That's a good one. I like
Right.
that one. Yeah. So your investment thesis is to move outside the valley and go to maybe underserved areas or the rest of the country. As you do that, what did you find when you went out away from the valley to other markets, and what was your experience in going into these maybe underserved from a VC point of view?
Well, it's an exciting time to be taking venture capital outside of Silicon Valley. When you have a significant amount of our country's GDP accessible within a 12-hour drive of Columbus, Ohio, where the importance of proximity to customer is so much more important, where the focus more needs to be raising money from your customers because you don't have as much opportunity to raise money from capitalists. And so I think with scarcity, you've seen some real cream of the crop rise to the top in these areas. And listen, we think customers are the best places to raise your money because they don't take board seats, they don't ask for equity, and they just want you to help them. And so we're finding founders that are more resourceful. We're finding founders that understand the importance of a strong customer base and are playing to the strengths of that pre-existing customer base. A great example is the state of Tennessee. I think it's one of the best states in the union, using entrepreneurism to fuel economic growth and to drive prosperity. And they're not trying to be the Silicon Valley of the South. They're playing to the strengths of the state of Tennessee. And so you've got the Oak Ridge National Laboratory in Knoxville, the largest additive manufacturing facility in the world, a Department of Energy facility. And so when Local Motors was looking to see where in the country they were going to put their headquarters to 3D print automobiles, they chose Knoxville. You've got Chattanooga, and Memphis, of course, two of the best cities in America for logistics, freight, and supply chain, obviously with FedEx. You've got Chattanooga and the Dynamo Accelerator dedicated exclusively to freight, supply chain, and trucking. And of course in Nashville, which is, where for-profit hospitals were invented, where hospital efficiency is being driven by some of the greatest entrepreneurs. They're in Nashville because that's where their customers are. And of course, music as well. I mean, I could go on, but that's a great example of a region, a state, and founders who are playing to the strengths by identifying the strong customer base and what's been driving the economy to work on innovation. We're finding founders that are seeking reasonable valuations. And I don't mean low valuations. We're looking for reasonable valuation that gets set not by men arguing on Sand Hill Road, but by the potential for profit, scale, revenue, right? We're finding founders that are focused on problems that are faced by the 99% and not just the 1%. And oh, by the way, we're finding founders that lack hubris. And we think that's a very important element to the types of founders that we want to invest in. These are founders that, have a learn everything mindset and not a know everything mindset.
Well, it sounds like part of your investment thesis is to go into underserved areas and look for founders who know their customers very well and have matched to their customers very well. We get a lot of companies that want to be Bay Area style in what they're doing, even though they're not in the Bay Area and they don't have all the resources that are there. And so then they struggle a little bit making it work because they can't find the people and can't find the technology to pull it all together. But it sounds like you look for people who are matching closer to their region and getting the best region fit and customer fit out of it.
That's right. And listen, let's be honest. The vast majority of innovation that's happening in Silicon Valley now has no need for proximity to a jet propulsion laboratory. They do not need the scientists coming out of Cal Berkeley. There are fantastic front-end and back-end developers around this country now. The last 10 years saw a proliferation of developer boot camps and the reemergence of a computer science degree. And so the challenge really is that market development and the proximity to customers. These are founders that don't quantify their success by the amount they've raised, at what valuation, and from whom. These are founders that'll answer the question, how's it going, with things that are relevant to the customer development, the market development, identifying of the first right type of customer, the right acquisition, the right messaging to acquire that customer efficiently and repeatably. These are the types of conversations that we want to be having with founders. The other thing I'll say to founders around the country that are contemplating a move to Silicon Valley, there's no question that the predominance of top developers are in Silicon Valley. There's just no question about that. But I would encourage founders to question whether they're going to have the easy, efficient, and immediate access to that talent pool simply by relocating to Silicon Valley. The competition is fierce. And don't assume just because you go into a larger pool that you're going to have access to that talent. I also tell you that Silicon Valley, being the most expensive rat race in America, can be challenging from a variety of perspectives to a founder who's trying to focus on solving real people's problems, as opposed to just attending a variety of meetups and being in the Disneyland of startups. And obviously, I'm being a little tongue-in-cheek here. There's, Silicon Valley is a wonderful place for startups and for innovators. I think our point is there are great opportunities to be present and relevant outside of the Valley. And the way we think we've figured out how to do that and be headquartered in Silicon Valley is through helping. And helping is our due diligence. That's why we run a private market development accelerator that's exclusive to companies in our portfolio. We use those experts to also diligence our opportunities. And it's not about reading a pitch deck and talking with founders. It's about understanding the problems they're having, trying to help them through those, and through that help, learn about the people, the market, the product, and the opportunity. It's also the reason that we run GrowthX Academy, which is a school in San Francisco modeled similar to a product developer boot camp. But rather than growing product developers who are learning HTML, we're growing market developers who are learning how to sell, how to do business development, how to do growth marketing, and user experience design. These are ways that we can train the next generation of innovators to solve the problem that seed stage companies are facing now. 70% of companies at the seed stage fail, and 70% of the reason why they fail have to do with the market and the people, not the product. And so through that capital, the talent, and the know-how, we're trying to drive the innovation economy.
So it's fair to say that the entrepreneurs should not be pitching you their product. They should be pitching you their team and their market, what they're going after and who they're going to use to go after it.
I always encourage founders to buck the common wisdom on the internet to bury the team slide all the way in the back of their pitch deck. I encourage them to start with it. And there's two reasons why. One, you want to make a human connection. And I hope every founder out there that's listening is seeking venture capitalists who want first to make a human connection. And you do that by introducing yourselves and telling your story. The second reason you start with your team is if you grab my attention that this is something enormous, that you're onto something that could potentially be game-changing, if I don't know who you are and what your background is, as you're telling me the rest of your story, there's going to be dissonance, whether it's conscious or subconscious. I'll be thinking, well, who is this person to be able to pull this amazing thing off? So if you start with who you are, who your team is, and what your story is, and why you're best prepared to do this, it removes that dissonance. So I think you should start with your team. The second thing is, as you mentioned, talk about the problems you're solving and the people you're solving it for. Don't jump into the product, the features, and the functionality. Be customer-centric. Be design-centric. Show me that you understand that there are people who have wants and needs that you can help and that you know how to connect with those people. I don't buy into the B2B and the B2C. It's people. Now, whether those are individuals or whether those are people acting under the auspice of an enterprise, it doesn't matter. Help me understand that there's a real problem out there because, again, the number one reason, according to CB Insights, why startups are failing at the seed stage is not that the product doesn't work. It's that they built something that's interesting but didn't solve a market need. And so that's really what I want to hear about. And, seed stage is so early. It's called seed for a reason. You plant it, you hope something grows. Help me understand that you're going to solve someone's problem. You have a hypothesis around how you think you're going to go about doing that efficiently and repeatably and profitably. And then prove out that hypothesis through going out there, collecting your data, following the scientific method through iteration.
Of course, getting customer traction is always a key validation point. What do you see as far as sales skills among startups? Of course, it varies widely, but is that part of your criteria? They're probably going to build a product. It's a website. It's going to do something that is going to be useful, but can they sell it? Will somebody buy it? Can they get out of the cube and really go and promote it to other people? And is how much of that is a criteria that you look for?
It's one of the first things that we look for. Nothing happens until someone sells something, and it's not just among seed stage founders that it's a problem. It's a systemic problem throughout the country in business because there is no professional sales track for people. There is for those that want to become an engineer or a doctor or a teacher or a lawyer or an accountant, right? List goes on, but there is no profession of sales, right? Very few people go into their profession purposefully. Less than 10% of the colleges and universities in America even teach a single course on sales, and that includes MBA programs. And one of the largest degrees held by salespeople nationally is liberal arts. And so I think the retail experience has spoiled people's view of what sales is. People think of the Glenn Gary, Glenn Ross types of sales. This notion of always be closing, it's just not something that we believe in, right? It's about seeking fit. And so we encourage anybody, most especially founders who are the chief sales officers, when they think about sales and selling and they get confused or they get turned off by it, we encourage them to replace those words with help and helping. The sentence works just as well, but it's 180 degrees different of a view. And it is the absolute first thing that we look for is does the founding team have an intuition, an interest, potentially some experience to approach sales in this more thoughtful way? Do they have a growth mindset versus a fixed mindset? Do they understand that no matter how innovative they think their product is, it's not going to sell itself? And so it's very much a bottom-up approach that we push when founders are talking to us. It's not enough to show me that there's a $50 billion market in front of you, and if you just get 1%, look how wealthy we'll all be, right?
Oh, yeah, we hear that a lot still, 1% of $50 billion. Well, who are you going to talk to? I have no idea. Okay.
Exactly. And so one of the questions I ask, and if you're a founder listening and you want to pitch me, be prepared for this question. From when you woke up this morning to when you're sitting with me here today, walk me through everything you've done, starting from brushing your teeth and washing your face to being here with me now, and talk to me about what you have done to get your ideal customer's money from their pocket or their business account into your bank account. And I want to know it in graphic detail, step by step. That bottom-up approach is what we want to hear. We do not expect the founders to use the terminology we use, right? We don't expect them to say market development. We don't expect them to know what an ideal customer profile is. We don't need them to talk about customer acquisition. But we want to hear them describe the steps in their words that they're taking to prove that they have an understanding that what's more difficult than building a product is selling a product. What's more difficult than launching a company is scaling a company. And so what are they doing about it? And they can use their words. And so that is where we like to start the conversation. Of course, after we've had the time to get to know them. And by the way, also for the founders that are listening, it's a two-way conversation. Be obviously polite and respectful, but you should be asking me and any venture capitalist all the reasonable questions that you need to know the answers to determine whether I'm a good fit for you. And any VC that won't answer the questions about the size of the fund, do they have the permission to invest? Are they making more investments this year? How much more capital are they deploying out of the first fund? Um, any other these types of questions, anybody that won't answer those questions, be polite, end the meeting, and don't ever speak with them again. Because you want to be seeking long-term, healthy, sustainable relationships with everything that you do in life. And that includes the people that are going to partner with you and fund your venture. And so make it a two-way conversation. Get to know me as a person. Look at our website, read our core values, be honest with yourself and your team about whether what we stand for and how we behave and our reputation is congruent with who you are as people and the type of company that you want to build. And only then should we proceed to the solution, the problem you're solving, the market development. Those things become secondary. The other thing I'll say is, for founders out there that are raising capital, be very careful. Avoid making the number one mistake that founders make when raising venture capital, and that is mistaking being busy for making progress, especially if you're in a Silicon Valley. Because let me tell you, it's very easy to get busy having conversations with people who are thoughtful and nice but have their own agenda, and that agenda may not match with yours, which is for you to raise the money. They may be trying to learn about what you're doing. They may be trying to do some kind of industry or sector analysis. They may be doing a favor for the person who asked them. They may be trying to prove out their hypothesis to help them raise their second fund. All fine and good, but not congruent with someone who's trying to raise venture capital. And so for founders, I always advise following Einstein's advice, or at least a quote that was attributed to Einstein, which is that if he had an hour to solve the world's problems, he'd spend 55 of the minutes defining the problem and only 5 minutes solving it. And so for raising venture capital, don't worry so much about your deck right now. Don't worry so much about who you know that has connections at what you believe to be the top 10 list of VCs in Silicon Valley or in the region you're in. Spend the time first finding the people and the firms who are consistent with what you're trying to do and have shown an interest and a track record for funding people like you and what you're doing. And only then try to figure out what the right messaging is to try to attract them into your funnel and work them towards being an investor.
Well, that's sage advice, and there's so many good topics in there for a follow-on call. Love to talk with you more about the importance of sales. I used to teach a class at the university, and I would always ask them, what did the big companies spend more on, product development or sales and marketing? And they almost universally said, well, product marketing, of course. And then I would ask, well, by how much? And they would say 2x. And then I would say, well, the 2x is right, but it's 2x on the sales side, not the product side. And it always blows their mind the first time they see that sales and marketing is really harder and more expensive than the technical work, at least in dollars, because you now have to get outside the building, you have to go meet people, you have to travel, you must hire many more people, you must generate leads, and it is really a much different kind of problem than they're used to solving at the computer desk. And so it's a great area to go into in more. And I once worked for a company where we had a sales and marketing conference, and the guy organizing the conference played a clip from the Glenn Ross movie you referenced, and it had Alec Baldwin saying, "First prize you win a trip to Vegas. Second prize you win a car. Third prize you're fired." And it was really funny he had a sense of humor there, and everyone got the joke and so forth. But when he started playing it, I thought, how in the world is this going to go down? And
it's had an impact on a generation of people. And I would certainly be happy to introduce you to my co-founder, Sean Shepard, to have that follow-up conversation with you. He's, probably the best market development professional I've ever known. Our market acceleration program has been built on the back of his experience. Our a curriculum at GrowthX Academy. The Sales and Biz Dev program was built entirely around his experience and his track record. We have a book that's going to be coming out in hopefully 7 or 8 months or so, which is the follow-on to Steve Blank's How to Build a Company, the Startup Manual. This is how to grow your company. It's all Sean's expertise and relationships and curriculum. I think you'd really enjoy having a follow-up conversation with him where he can focus exclusively on market development and what he has built, which is the foolproof formula for finding product market fit. You'll hear him tell you that products and markets might be unique, but the path to product market fit is not. It's highly formulaic. And so I'd be happy to make that introduction if you'd like.
That'd be great. And as we wrap this up, what's the best way for people to get in touch with you?
Anybody can reach out to me at hello@growthx.com.
Okay.
I welcome the opportunity to meet people. We want to explore the right context to be helpful, because we're all about relationships and not transactions. And so for us, it's not about how can we deploy capital. That may be the right context, but help us understand what you're doing, and let's figure out how we can be helpful to you. It may not be now, it may be later, it may be an introduction, it may be a quick piece of advice, it may be a referral to something that we've written or produced. It may in fact be, okay, let's pitch and see if we want to invest. But it's all about building healthy, long-term, sustainable relationships.
Well, that's great. Well, I appreciate you taking time to talk today, and we'll put the show notes together and get this out, and look forward to talking with you and your colleague in a follow-on call to go into more depth on all these topics. It was very good, and appreciate your taking time.
Absolutely. Thank you, Hog. Grateful for the opportunity to be with you today.
All right. Thank you so much.
Take care.